Hi, this is Kerry Artak with Wicked Stocks bringing you the daily Tesla report for Tuesday, October 11th, 2022. Before I jump into the charts, please click like each and every time you watch any content we put out on the Wicked Stocks YouTube channel. Helps us out a great deal. Subscribe to our channel if you haven't already. You'll be notified each and every time new content has been uploaded. And feel free to share this with any of your friends and colleagues who may also be interested in our daily analysis in the Tesla on the daily Tesla report. Let's take a look at the charts here. We're going to jump to this weekly chart. Just a big picture reminder that a couple of weeks ago, actually a week ago yesterday, we gapped below that trend defining speed line, midterm support it was, above which anticipating the 310s or 320s within 3 to 5 weeks or so, but that obviously didn't happen. We gapped below it, closed below it, set off a sell signal. Near term 206.85 remains our target. That's a 3 to 5 week target that may be realized in as many days, say by Friday's close. Perhaps I'll get to that in a moment. And over the next 2 to 3 months or sooner, could be 2 to 3 weeks, 187.26, that channel bottom that we tested in May and held nicely and can continue to contain quarterly selling pressures if tested. And once again, it's a 2 to 3 month target below 267.50. The daily chart says the same thing, just sort of acquainting you with the daily bar chart, having gapped below the mid 260s, anticipating as our next near-term target, 3 to 5 week target, 206.85, the May low. And let's jump to another chart that is along those lines. This provides a sense really of 217.89. We came close to testing that actually on Monday, within less than a point of that simple trend line off those lows from the May lows. And then we've got 229.56 is nothing more than a minor point today. In fact, this is probably the wrong chart to show you. What I really want to show you is this chart. No, that's not it either. Bear with me here. This is it. I know every one of the charts I've shown you, by the way, is a legitimate chart. It actually shows one of these points that you can see on the support and resistance column. It's just that I need to focus on those that can contain daily buying pressures. And so we have 233.76. I almost called 226.99. That is Monday's high, kind of an intraday upward pivot point. You could consider it as much. Pushing or opening above 226.99 may well yield the 233.76 descending channel top. It is based on the last week of activity, can contain daily buying pressures. We may fall off from there and by tomorrow retest or come close to testing that 217.89 trend line. So this is the day itself. That's how I would characterize the day. 217.89 support, 233.76 resistance, either which can contain daily activity. The signal for reaching 233.76, as I mentioned a moment ago, you could say pushing through 226.99 Monday's high, but just know that 229.56 is also a legitimate level that I actually showed just a moment ago as this descending trend line. So, that's where weighting them properly is important. 229.56, we could easily push through that today and tag 233.76, which can contain daily buying pressures. Once again, 233.76 is this formation here. Now, by the way, I don't know if you realize it or not, you can download this newsletter each and every day, and you can click on the charts that opens them up to the proper page, see the support and resistance levels on a day-to-day basis. I will say, and I don't anticipate it, but if we did close above 233.76, we should within 1 to 2 days test this new descending 1/3 speed line at 248.73. It can contain weekly buying pressures, and we can fall off from there into next week. So the only scenario in which I anticipate a test of midterm resistance, 4-star resistance in the 264.88 to 267.50 area would be if we were to close above 248.73 in the coming days. And I just don't see that happening. We may reach 248.73 or that descending 1/3 speed line by Friday's close. For instance, if we settle today once again above 233.76, we have a 1 to 2 day target at 248.73. That would put us into Thursday, Friday, and this speed line able to contain buying through next week. And from there, we could fall back to 206.85 within a couple of weeks of doing so. So I think that kind of outlines the day itself. Now, downside, still the path of least resistance if we break or open below 217.89. And I came very close to calling this a mere intraday support level, not necessarily session containment, but it is still a classic trend line. We came close to testing it yesterday. We could form kind of a 2-day double bottom here, perhaps at 217.89, and from here test 233.76. If not today, then tomorrow. But breaking 217.89 is considered an eventuality. And if today, with this kind of volatility, we may well test 206.85, our 3 to 5 week objective on an intraday basis. So breaking or opening below 217.89, make way for 206.85, where we could double bottom not only for the week itself, but quite possibly through the balance of October trade. We could round back up here within a couple of weeks, test the 1/3 speed line, which would be a different line at that time. It has to be reconstructed for every new low, but I think you get the idea that from 206.85, we could have a nice 2 to 3 week bounce into the 240s and then fall off again from there. Still anticipating longer term this 187.26 long-term channel bottom. And I'll say that if we were to close any day this week below 206.85, by the end of next week or sooner, 187.26 in reach, where we could bottom out through the rest of the year. In terms of upside, once again, I'll remind you, and I don't expect it, but you never know, if we were to close above the 233.76 descending channel top, we've got a 1 to 2 day pop to the upside, 248.73, where we could top out through next week. And I am just going to leave it at that. There's really not much else to say for today's daily Tesla report. I'll be back tomorrow with Wednesday's Tesla report, and you have a great day.